Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560, The Answer. Now, we were talking a little bit about, this is our segment we usually talk about, my blog.
And what's on the blog?
The blog is the Currently Not Collectible. Now, recently we've been talking in the last several shows, we talk about the 6 things that you can do if you owe the IRS money.
First is pay them.
That's the first thing. That's right.
You didn't think I was listening.
I didn't think you were listening.
I usually fall asleep right after 3.
You know what else I wanted to mention before we go on is I wanted to mention that
Not Lonnie Anderson again.
No. No, I wanted to talk about my sister's birthday.
Oh, and that was Friday.
I think we talked about her last week because she's an avid listener of our show. So
she's the one.
She's our number one fan. So I wanted to wish her a happy birthday, tell her that we're thinking about her. That's right. But again, there's 6 things. Jim said the first thing, which is pay them. And I always tell people, if you could borrow it from someone else and pay the IRS.
Not the mob.
Or the IRS.
Yeah,
same thing.
That's the only one worse than the IRS.
That's right. Or the same.
Well, maybe. They're about the same.
The same. The mob doesn't have legal channels to get you, and the IRS does. So the second thing you can do is you can get an installment agreement, and we talked about that. And if you have a question about an installment agreement, go to the website. Look in my blog section, and there's an article about it, and so it'll tell you all about it.
Or you can go to one of the podcasts and listen to us.
Or I have a section for the videos. You have sections for the blog.
Technology is unbelievable.
Yeah, so you can watch our section when we on the video about what an installment agreement is. The third thing you can do is you can do an offer and compromise. And we talked about that last week. So, again, go to the website.
Was that last week?
That was last week.
Oh, right.
And so an offer and compromise is when the IRS...
Seems like yesterday.
The IRS agrees to take less than you owe them in a lump sum. And so today is the fourth thing you can do. And the fourth thing you can do is you can get into currently not collectible status with the IRS. So if you go to the IRS website, they list 16 things ways that they'll put you in currently not collectible. Things like the expiration of the statutory recovery period. So
if you're in an iron lung, no, they still come after you.
Death of an individual. So if you die and you don't leave any assets for the IRS, they'll put you in currently not collectible status.
But they're the first ones that go through your pocket.
That's right. Absolutely.
Keep the loose change.
That's right. If your company goes bust, and some of the taxes might be imputable to the owners, but like income taxes, if the company owes income taxes, then they'll be currently not collectible. If you're in a combat zone, the IRS will put you in a currently not collectible
status. That could be Chicago.
And probably, I think I
forgot South Chicago,
might be. And then, but the most common type of currently not collectible is what they call a hardship. And the hardship is when I can prove to the IRS that I can't pay my tax and pay my reasonable living expenses. So if I could show them that, I'm not making enough money, IRS, to barely pay my bills, how am I going to pay you? The IRS will put you in this currently not collectible status. But they don't just do it. You don't just call and say, I can't pay you. Right? You have to prove it.
Did they take a dog or something? One of your kids?
Well, first of all, we always talk about compliance on this show. Compliance means that you have to file your taxes on time. You have to pay as you go along. Once you get into an agreement with the IRS, whether it's an installment agreement or whether it's a offer and compromise or currently not collectible status, you have to stay in compliance. So, again, that means filing your taxes next year. So this year, the IRS grants me the status of currently not collectible. Next April, I don't file my taxes. Guess what? I'm not in currently not collectible status anymore, right? They're going to start coming after me again. So,
but I'm not collectible. What did he say that?
You're not in compliance. So they won't give you that status without being in compliance. And that happens with the installment agreements and all of that.
So then you have to pay an attorney to go back and go through the whole thing again if they'll let you back up.
You're right back where you were. That's right. And it's a bad thing. So
it's a vicious circle.
So the first thing, always stay in compliance. Get in compliance and stay in compliance. That's a big, big deal. Okay, the second thing, now they're going to do a financial analysis, right? So they're going to pull. They have this form. It's called the 433 form. There's A, B, F. There's a bunch of different versions of it. But actually, and the title or the name of the form is a collection information statement for wage earners and self-employed individuals. That just rolls off the tongue, doesn't it? That's a great title for it. Okay, so so this form collects a bunch of your financial, all your assets, who you owe money to, what your income is, what your expenses are, and they want all of these documents to substantiate what you say. So if I tell them I have insurance, my health insurance, they want a bill from the health insurance company to show this is what my insurance bill is. Mm-hmm. They won't just take your word for it. Okay, so and how much?
How dare they?
And the level of scrutiny that they're going to give to your request is going to depend on how much you owe. Right? If I owe a lot of money, they're going to give me a lot more scrutiny. I think I talked about this on another show because people don't understand sometimes that when you call the IRS, they have a lot more information about you than you think they do.
Right at their fingertips, too, don't
because they probably pulled your credit report. They probably looked at in the real estate of your county to find out if you own any other real estate that you're not telling them about. They'll look at your cars, what kind of cars you own, because they're all registered with the state. So they're doing their investigation. So you can't skimp and you can't not tell the IRS something that's going on. They're going to find out. They're going to know what's going on. So you always want to be 100% honest and forthright with them. Because if you're not, you're going to get in trouble. And remember, a lot of this stuff, you're signing a lot of this stuff under penalty of perjury.
That's right. Anything you tell them, if you lie to them, they could actually prosecute you, can't they?
That's right. Again, that's perjury. So they'll come after you. So once you get in the currently not collectible status, then if they were levying your pay or if they tried to freeze a bank account or something like that, then they'll stop that. They'll reverse it. They won't come after you anymore. They won't be sending you collection letters anymore.
Will they still charge you interest on what you owe them?
That's a very good question, and the answer is yes. They will still charge you interest and penalties. So that's the bad part about it. The bad part about this is that the bill is still climbing.
Well, why wouldn't I go to one of those people from Lake California who say I'm only going to pay pennies on the dollar?
Well, that's what we talked about last week, which is the offer and compromise.
That's right. I heard that before.
But if I don't have any money to pay them on the offer and compromise, then what good is that going to do me? If they say, well, yeah, we'll take a lump sum, but I don't have a lump sum. Well, then how are you going to do that? So again, sometimes what we want to do is we want to get you in a currently not collectible status first, and then do an offer and compromise. Mm-hmm. One of the things, a good part about this kind of the currently not collectible is that the statute of limitation doesn't stop tolling. Okay, so which means
it tolls for the.
That's right. So the statute of limitations generally is 10 years. Okay, so
if stole your line, Lou.
That's I understand. Mary Tyler, that's my favorite show. Anyway, what happens is there's what they call a collection statute expiration date. I love to mix, complicated legal issues with Mary Tyler Moore.
I'm very impressed.
As you should be. So a collection statute expiration date, this is the date that they can no longer collect from you. So there is a statute where they say, hey, after this date, you got to leave those people alone. Okay. Wow. So if I could get currently not collectible status, if I remain there until that date expires, well, then they can't come after me, and I haven't paid them. So while they haven't forgiven the debt, they just can't collect it.
You don't think they're listening, do you?
I think they understand that there's an expiration date. Sometimes they don't like it.
And sometimes I see a guy sitting in front of my house ever since we started this.
And oftentimes you have to remind the IRS that there's a date. Hey, this date is coming up. You can't come after them anymore. Oh, you could see the frustration or hear the frustration in their voices. Oh, that's right. We can't come after you anymore. So again, sometimes you can't get rid of the debt, but sometimes you can outlast them.
But you have to stay current, is what you're saying. That's what you've always.
Another bad thing is they could still put a lien against you. So they they could still put a lien against your property. If you owe more than $10,000, they'll probably put a lien in. But they're going to do that anyway, even if you're in an installment agreement. Offer and compromise, once they agree to the offer, they can take the lien. They'll take the lien away. But otherwise, they're going to put a lien. So that's another bad thing that happens. But
does the lien leave when after the time is up?
Yes, because you don't owe it anymore.
Really?
So, so that's good. So sometimes you can just let.
If I wanted to find out more about this, how would I do this?
Well, then you should call me. And if you have an IRS problem, you should call me. 312-664-6649. Go to the website, chicagotaxteam.com, and get some answers, because there's lots of answers there. And if you want a copy of my book, you can send me an email at questions@irsradiohour.com.
And that's free, the book, right?
That's right.
All right. Don't go anywhere. We'll be right back.